I'm here today with my friend Ian Slater, the CEO of Red Eagle Mining. It's great to see you, Ian.
Thanks, Tommy. Thanks for having me.
Now, I've been following the Red Eagle story for 3 years, but it wasn't until recently, in the last couple of months, that I've gotten to know you a bit. And I was pretty fascinated by your story. You weren't a conventional bookkeeper when you got out of school. Can you just tell us a little bit about Russia and what you did as a young accountant?
Well, when I got my CA with Arthur Andersen in Vancouver, it was, you could imagine, auditing for a living. So I asked for a transfer to the craziest destination they could think of at the time. And in the early 90s, that was Moscow. So it was the Wild East, we used to call it. There were some crazy stories.
So what did you do there in Moscow in the early 90s? What was your role?
Well, when I first joined Arthur Andersen, I was put in the mining group. So didn't know anything about mining and grew up in Vancouver. And once you get transferred to Moscow, I was the mining guy. So we got up to speed fast, and I built their mining practice in the former Soviet Union. So a lot of time actually in Central Asia. At the time, Uzbekistan was booming, and then later on Kazakhstan.
And you were a fairly young guy at the time.
Yeah, early 20s.
Yeah. So how long did you stay there?
6 years.
6 years?
Yeah, I became the youngest partner in Arthur Andersen there at 27.
And I understand that you're working for some pretty influential people in the capacity of outside advisor. Can you just tell me quickly about the decision or the transition from working on the outside as an advisor with a big firm to joining the mining business specifically?
Well, most of the work I did over there was actually negotiations for major mining companies with the governments in Central Asia. So it wasn't a huge jump. But after Andersen fell apart, I moved home and built Ernst & Young's Canadian mining business and got to know the major Canadian players that you know well too. Actually joined Lundin for a year and worked with his team. It was an amazing education for a year, working with people like Wojtek from NGX, and Colin Benner, who was there at the time, who's the CEO of Lundin Mining, and Lucas himself. So it was a great education
for
a year.
Guys.
Yeah.
So what was the outcome of that year? Was some troubles in Russia, or?
Yeah, Lucas. I was working in Russia with them, and Lucas really pulled out of Russia. So I went, and it was good timing because then I went out on my own.
And the business, the concept from the beginning was to, become a natural resource developer, acquire a team, find projects, build them.
Yeah, exactly. It was a lot of hard work the first 2 years, and finding partners and a team to do it with, the technical team, and the right projects globally. So we scoured the globe looking for the right projects, and we ended up with Santa Rosa. Yeah.
More
importantly,
how'd you find Bob?
Well, Bob and I had a mutual friend. So Bob was the GM of Dundee's Chelopech mine, underground copper gold mine in Bulgaria. And when Bob was flying through Vancouver, going skiing in Whistler, and our mutual friend hooked us up for dinner, and before we ordered our food, we drank a couple bottles of wine and agreed to be partners and build this business together.
So then you guys, at that time, this was pre-Santa Rosa, this was pre-Red Eagle?
Pre-everything, yeah.
So Red Eagle's established. You acquire the Santa Rosa concessions. I guess it's a historical, artisanal area in Colombia. That's right?
Mm-hmm. Yeah, well, Bob went down to Colombia, and we hired a local team, a great team that we still have, and they looked at dozens of projects, or maybe over 100 projects throughout Colombia, and Santa Rosa was the best one. So it's an entire historical mining district. It goes for tens of kilometers, which we own 90% of it now. We've acquired it from Bob Allen's Grupo de Bullet and more recently Anglo Gold, yeah. After the original deposit we acquired from a local mining company.
So the original Red Eagle, we went public in 2000 or 2011 or 10?
2011.
Yeah. So sort of like a top in the market moment.
Well, actually it was just at the end. We did our private round in the beginning of 2011, and then we IPO'd in June 2011. So it was really at the tail end of that. Yeah.
So since then, though, you have raised a significant amount of money and taken a project. I wouldn't say it was grassroots, but it had very limited work done in Now, where does it stand today?
So they've mined all of the oxides, or a lot of the oxides, over the last 400 years, but none of the sulfides, and no modern exploration whatsoever. So really grassroots on the sulfides, but great indications that there was a mine there from all of the workings in the oxides. So one of the things we're most proud of is we've always done what we said we were going to do. So from our first financing round in January 2011, we promised to go public that year and to raise on all of the capital to go into drilling the project. And we went public in June 2011, and we commenced drilling in September 2011.
Tell me about some of the further promises that you made and kept.
So with, for example, the next year in 2012, we knew we had to raise additional capital to develop the property. And this was when we met Liberty, and Liberty came down to site, and along with actually half a dozen other more of the private equity type of investors, and we chose to go with Liberty. And what we agreed with them was to not do more grassroots exploration on the other deposits, because there's a string of deposits here, is just to infill drill San Ramon and develop it. So they were more interested in, of course, in a development story where they could see cash flow and production. So for them, the end game is they have a royalty on the property, and also dividends, where our plan is to very much pay dividends as soon as we're able to after we're in production.
What are the steps today to get the project into production? Like, tell me exactly what you have in terms of resource and what you're expecting to have once you're in production, and what the several milestones are specifically between today where you are and where you intend to be a year or two from now.
So the plan is in Q1 2016 to be in production with a 1,000-ton per day CIL plant and producing 50,000 ounces a year on average for actually a long life, but what we have is 10 years in the PEA, and it'll be reduced to 8 years in the DFS just due to the not being able to use the inferred. And the steps to getting there is the DFS is on budget and on schedule. It'll be ready in the end of August and released in September. Permitting.
Is that a big catalyst, releasing a DFS?
Well, I think it's a big catalyst from the debt perspective. So we've been working for 6 months now with half a dozen different debt providers. So once we have the DFS, then we can finalize the debt terms for the project. So overall, the project's going to be slightly under $100 million in capex, and we're expecting about $65 million in debt. Is at least $65 million in debt is what the conversations have been about.
So hopefully the DFS followed by maybe permitting.
Well, I think the way it'll work is DFS, and then in the fall announce project financing, and then by the end of the year announce permitting. Though really, it's a wild card, the permitting, because we're going to be the first modern gold mine in Colombia. So all the indications are that we'll be permitted by the end of the year, but we don't really know.
And the market's certainly not giving you much, slack in that regard.
Well, zero.
Yeah.
It's the biggest question about Colombia is, will they permit new mines? It's a misconception.
Yeah. As we both know, there are coal mines, nickel mines, gold mines.
Huge ones.
Yeah.
And actually in Antioquia itself, dozens of underground gold mines. They're just locally owned and smaller scale.
So you're dealing with the Core Antioquia? Sorry.
Yeah, that's right. Core Antioquia, it's exactly right. So because we're an underground gold mine and we're in the Department of Antioquia, it's the one department where Bogota is delegated permitting to Medellin. So we can deal with just a one-step permitting.
Where do you stand there? What's the latest?
Well, the last step was we submitted our EIA in February. They've come back with some questions which we've addressed and are currently working on, and it's communication both ways every week.
So is all systems go?
There's nothing that they've asked that we can't address.
So DFS in the early fall, and when you say project finance, is that the debt component?
Yeah, that's right.
So then hopefully you have DFS, debt component, permitting comes in, your share price is imagine some order of magnitude higher, and then raise some equity to
absolutely
to pay
so
that.
Just to have all of those ducks in a row, so that when we do have a window like we had in February, where the gold development stories can get financed, we need to be in that position, so everything's ready to go for that window, which I think will happen. I think there'll be volatility in the gold market the next year, and either in the fall or the spring that will happen.
Okay, so what's the Red Eagle valuation today?
It's $20 million, which
Yeah.
is frustrating, because if you look in the market at other similar type projects, similar stage, maybe slightly ahead, they have almost 200 million market caps. So
What are some examples?
well, if you look at Roxgold, for example, right?
Yeah.
They are, they're slightly ahead. They've got their, they announced today that who they're working with their debt on, for example, right? But
Similar economics to the two projects?
similar economics. If you put all of the development stories today side by side in a spreadsheet, and you look at the IRR, the NPV, the cash costs, they're comparable. So we're at the top end if you look at IRR, or if you look at cash costs, we're at the top end of all development projects globally.
Okay, so the valuation is roughly $20 million right now.
Mm-hmm.
And what kind of cash flow would a business in the current gold price environment be spinning off if you reach 50,000 ounces of production in a year and a
Our
half?
first year spins off 60 million of free cash flow.
That's net of royalties, net of,
Mm-hmm.
well, obviously there's debt to be paid back.
That's
but-
before interest.
Yeah, well, that's pretty staggering.
Mm-hmm.
So assuming that all goes well and you become this business that makes $60 million a year, what are you going to do with Red Eagle, and what's the vision for the company beyond Santa Rosa?
Well, twofold. So one is definitely to be a dividend-paying mid-tier gold producer. So to start with, to expand the production. So we're designing the plant from day one to be expandable from 1,000 tons per day to 2,000 tons per day. And that won't come from San Ramon. San Ramon will be a long life asset, but it'll always be 1,000 tons per day. So we're current resource only, which is reserves actually as of September, but that work's already been done. Is only down to 250 meters, and the deposit clearly extends onto the Anglo ground, which we just acquired, and so the current resource is just chopped off at the concession boundary. So with the current reserves, it'll last 8 years, but realistically below 250 meters and on strike into the Anglo ground, it'll be a long life asset. Mm-hmm. But cut at 50,000 ounces a year. So the plan is to, during 2015, while we're in construction, is to drill some of these other targets that we have that are nearby, and we'll ship the ore to be processed at the same
What
time.
about theoretically buying other projects or diversifying the business?
Absolutely. We just need that catalyst of permitting, production, and absolutely to acquire, especially in Colombia, there is a lot of opportunity.
Tell me about operating there.
It's surprisingly a lot easier than we thought. It exceeded our expectations. Both Bob and I are used to working in Russia and Kazakhstan, and compared to that, it's you can never say easy in the mining world, but a lot easier than working in some of these other jurisdictions. We've had only support from the government at all levels, from the mayor's office to Medellin to Bogota. We have great support from the local community, even from the church. It's been overwhelming, really positive support for the project, and we've never had any security issues. We've never had any corruption issues.
What
So
about
it's
the
been a
election
positive
of the
experience.
re-election of Santos? Is that important for Red Eagle, or?
Not really. Either one of those candidates would have been fine for what we're doing. They're both they're both from the right side of the spectrum of the politics, and
Friendly to business, and
yeah.
and everybody should know it's not like gold mining is a new thing in Colombia.
No,
I was just in the gold museum in Bogota, and it's incredible.
Mm-hmm.
Okay, if I can give you a little bit of a critique or a pressure, what do you say to those who say 50,000 ounces is too small?
I think they're living in the past. I think you should look at profitability.
Yeah.
And even if they're right, it is too small. We're moving up to the larger production it'll be 75 to 100,000 ounces at Santa Rosa, and we're going to add on other. We're going to be a multi-asset company. But I think regardless of that, it's if you could build a mine for under 100 million and it has free cash flow of 60 million in year one, you should build it.
It's a good investment, yeah.
Mm-hmm.
So tell me a little bit about the investors that you have, because they're the who's who of mining money now, and I'm wondering what was their rationale, if you can comment on it.
It's the same. They've done a lot of due diligence on the property, and their rationale is exactly as you discussed. It makes money. So our cornerstone investor is Liberty, and has been since October 2012, and they own a 3% royalty on the project and own 20% of the equity. So they're committed to developing this property with us.
So you'd anticipate having some support from them when it comes to the equity side of project finance, or?
Well, see, they can't promise it, but all things being equal, if there's no surprises in the DFS and good debt terms, that they would be there for a lead order for 20% to maintain their position. And we have other great shareholders as well. So Appian, who I know you've interviewed Michael before, so they
That was my colleague Travis, but seems like a smart guy.
So they own 13%, and Ross Beatty owns just under 5%. Do
you mind if I ask about for yourself?
Sure. And then there's a family in Peru, actually, of a private producer that produces 200,000 ounces of gold that owns just under 5% as well. But sorry about.
I was just curious. What about you? Have you got some of your own money in the project?
Sure. Yeah. I mean, I think if you look at it as management as a group, we own 12% of the company, and we've put in almost $2 million of our own money.
That's impressive.
Mm-hmm.
If I can ask you, with the NSR, so there was first it was 2.5%, and then went to 3%?
2 to 3.
2 to 3.
Yeah, and we can buy one back once we're in production.
What does that mean for the economics? Like, what is that going to cost you going forward, do you think?
Well, those are in the economics.
Yeah.
In the economics that we're talking about. And really, if you, on the current gold production, if you net present value the payments, they equal pretty much what we paid for them, of course, because that's how they valued them, right? So the upside there, of course, is on more production from the satellite deposits. It's important to look, though, when you look at our properties, that there's multiple royalties on it, but they don't overlap. So it's a common misconception when people, if they look at the project. So when we acquired ground from Anglo and from Bullet, we acquired them for royalties, for 1.5% to 2% royalty from each of them, but they don't overlap with the Liberty royalty.
Right. Okay, so you've got yourselves a couple $1 million in, and Liberty and Appian and this Peruvian family that's in the mining business. So you've received funding, and I know that the Haywood team has been very supportive as well, from the industry, from what you could say would be corporate or smart money types, but there's been absolutely no love in the market for junior mining stocks in the last 3 years. So what's it been like from that side of things?
Well, it's been a tough few years for sure, but it's not as tough as a lot of projects, I think, because we've had that support from these big institutions that we've been able to fund every year as we've been progressing the project. Maybe not at the price we'd always liked, but the cash has always been available to progress the project.
So the money's there.
And also, with Red Eagle, it's never been really well-known story until recently, really, where this last bought deal we did in April was with Haywood and National Bank, and they weren't involved in the story before. So I think as we go through the rest of this year, there'll be a lot more eyeballs on Red Eagle than there were in the past.
Okay, but running this business and having your own skin in the game, what is keeping you up at night right now?
Well, not the project, not the technical side at all, and not the permitting, because I'm convinced that we will be permitted, just a matter of time. And I think it'll be this year, but we can't say for sure. So it's nothing to do with that. And the debt financing is definitely going to be there. It's just the timing of when there is a window, when the gold market turns, and there's a window where we can finance again. So really, it's not anything keeping us awake. It's just I'm impatient to build a mine, and and some of the market timing is out of our hands.
What is your job as the CEO versus some of the team that you have? What do you do versus what does Bob do and people at site? Well,
it's really a team effort. It has been since day one. Bob handles all the operations, and he's, obviously he was one of the founders of Minprox Mining Group, so he's done a lot of feasibility studies and built a lot of mines, permitted a lot of mines, and ran them. He's an operator as well. So with his experience, it's in good hands building the mine and the team that he's put together there. And then from the social side, we have an entire Colombian team that manages that, which is just as important as the technical side. Our country manager, our social manager, environmental manager are all local folks who have a lot of experience in permitting other types of mines in Colombia. So it's definitely a team approach.
Yeah, before we bring Bob in, just like sum up why you're pumped about this time in Red Eagle's life cycle.
Well, we're getting close to cash flow. So
Yeah.
that's what's exciting. So there's we can really see the roadmap now from DFS, debt project financing, permitting, equity raise, construction, and production in 2016.
So an investor today looking at the story, would you'd want to expect to have at least a couple of year time horizon, and usually it's the value sort of comes when they enter production in that moment. But do you think?
I really think permitting is a key catalyst before
Yeah.
production as well, because it's the perception in the market is that you can't permit in Colombia, but it's a misconception. It really depends in Colombia where you are, just like it would in any country in the world. If you were looking at the U.S. or Canada, there's definitely some provinces or states where you'd want to be permitting, and Antioquia is one of those places in Colombia.
Well, it's not like the environment for junior stocks could get any worse. So
No, and the perception of Colombia too.
Yeah. Why don't we bring in your partner Bob and continue this conversation with him? So you guys are brothers, right?
Almost, almost. Well, he's my son almost, I think, more to the point.
Anyway, joining us is Bob Bell, who's the Chief Operating Officer of Red Eagle and a mining engineer by trade. I thought it'd be a good idea to have Bob here to talk a little bit about some of the on-the-ground challenges of building the Santa Rosa project. Just to start off, help my audience understand where you're coming from. What are some of the projects you've been involved in the past, and how are they going to be applicable to what you're going to be doing over the next 18 months in Colombia?
I guess over a large number of years, I've built a lot of projects, particularly a lot of gold projects in Australia, Africa in particular, and Kazakhstan, as Ian mentioned, I think earlier on. I was involved there, and it's a lot easier to work in Colombia than Kazakhstan, for example, in terms of building projects, and even Africa, West Africa was where I was predominantly building projects. I still think Colombia is a little bit easier even than West Africa, but I've got a pretty diverse experience both in conducting feasibility studies, building and developing the projects, and also running and operating them.
So that seems fairly relevant, you could say.
Fairly relevant indeed. This one's a piece of cake as far as I'm concerned.
Yeah, I've heard you say that before.
Yeah.
Can we just chat a bit about the mining methods that you're going to be using?
Yes, we've put quite a bit of research into the best optimum mining method for the ore body, particularly over the last 18 months or so, and we've looked at a couple of alternatives which we did in our original study in the preliminary economic assessment. But we've come up with something that's a little bit different, which we call mechanised shrinkage stoping with delayed fill. Now, shrinkage stoping's been around for about the last hundreds of years. It was probably the original underground mining method that was ever adopted. We've just put a twist on it, which enables us to get better safety in the mining activities, and also a better grade and quality control of the extracted ore.
So does the independent technical community consider your method credible, and are you receiving the validation from third parties when you're doing these studies that what you're proposing is going to work?
Well, we're using very reputable mining consultants who are developing this concept of a mining. It's also been signed off by one of the major international geotechnical consulting groups in the world.
So do you have any fears about building this project, like any anxiety?
But also sort of, Tommy, I mean that the mining method we're using, though, it's a twist on it, but it's a tried and true method. It's not an unusual method, and Mine Development Associates and Golder are like Bob says, extremely reputable companies.
I was trying not to advertise.
So you say it's tried and true method, piece of cake. Is there some unforeseen challenges, contingency? Tell me a little bit about what the risk management process is going to be like in building this project.
I guess the risk management that we need to adopt is very close, experienced supervision of the underground operations. We're intending to use Colombian mining contractors to do all of the development and or production work in the mine. There's a large number of very experienced Colombian mining contractors around who are very good, used to development. They do a lot of road tunnels and excavations for hydroelectric schemes, which are ongoing on a constant basis in Colombia, but they've never done any production. So we have to introduce our own experienced expatriate people to supervise the production. But that's not an issue, not a problem.
No, certainly when you're sending them just north of Medellin, I would want that job.
I don't think it'll be too much of a hardship, to be quite frank, yeah.
Okay, well, I was speaking with an analyst and trying to find tough questions to ask, and he said, well, ask Bob about the continuity of grade. Is the ore body continuous enough? Is the gold there? Is it consistent? And is there a risk of running into concentrations and then losing them?
There certainly appear to be high-grade zones within the main bulk of the ore body. The ore zones are very continuous over 2 kilometres. The average width, and some of them are stacked up to three zones across the width of the shear zone, which contains the ore body. On the average, there are around about 3 metres in thickness, the zones. We can define the ore body over that full 2 kilometres, and as Ian mentioned earlier on, it is open at depth, and it does continue to the east and with depth underneath the newly acquired Anglo-Gold Ashanti ground. But within that very continuous zone, there are some high-grade zones, which without any denser drilling, we're not sure how continuous they are. I think they could be larger. But certainly I've got a lot of high confidence in the high-grade zones themselves, which are certainly going to be carrying the project in the first 3 years or so to generate the cash flows that Ian indicated earlier on. We've consulted with some of the best ore resource geologists in the world, and they've got a high level of confidence as well that the grades will be continuous throughout the full length of the ore body, but we will have the high-grade pods that we have on our resources at the present time.
So you've been around a lot of mine builds and companies. Do you see any bumps in the road over the next 18 months as you become a producer?
No, I don't think so. I mean, I think as it was indicated too, the biggest stressful thing we've got is timing as to whether we can get it going. I'm dead keen to get underground and get it opened up as quickly as possible. From my experience, and that's over 40 years, one of the biggest problems in all underground mines is keeping your development ahead of your production. So invariably, mines always end up having to chase their tail all of the time, with development opening up new areas that can be exploited for the ore. So the quicker we can get going and get the development started up, the better off we'll be. So that's really what I'd like to see happen.
Yeah. Well, okay. Well, enough of the challenges. Like, what do you think are the advantages of the project? I mean, capex in this environment seems pretty low. People must like that. What else does the Santa Rosa have going for it?
Well, yeah, it is relatively low capex, and as we go forward with the feasibility study that we're conducting now, we are demonstrating that we even get the capex lower than that was indicated in our first study. But the main thing is that it generates a lot of cash, and yes, on the average it only produces 50,000 ounces a year, but it's very cash positive and generates
60 million annually. At what gold price?
In the beginning, it's just in year 1 it's 60 million at 1,300 gold price.
Right.
It fluctuates with the grade over the life of mine. So in the first year, it's 8 grams actually. There's a high grade zone right near surface, right where the decline's going in, which is easy to get to, which we're going to mine up front.
Yeah, within 100 metres of surface, by the way. So we're very fortunate that we can attack some of the highest grade zones of the ore body right up front in the first year.
So we have fluctuating grades over the 10 years between 4 grams and 8 grams. And
so
your cash flow depends on
and
the
how
grade.
bad, how tight could it get in some of the more challenging years?
Oh no, it still works. It still,
Still works
fine.
fine. It still works fine. It's a very, use my phrase, it's a dead simple mining operation, and a very dead simple mine to build. There's nothing technically complex in the ore processing. The gold is clean and free, comes out. We're aiming for 95% recovery in the process, and but it's still only 3 meters wide on the average with the zone, so you can only extract so much per day or per month or whatever you want to say, and not just my experience, but the experience of our consultants have agreed that 1,000 tonnes a day is about the optimum that you can actually get from this operation. I hope we get a little bit more, but certainly not considering it at this stage in terms of the economics anyway.
And are you going to be around overseeing the project in the
Can't wait.
future? And neither of you have any plans to, doesn't seem like this is a build to sell at the asset business. It seems like you guys want to build a multi-asset producer.
We want to get it
Absolutely.
going and produce, that's right, yes. That's why we call ourselves Red Eagle Mining and not Red Eagle Resources. The mining means that we want to mine, and we carefully chose that. I'm going to be around for as long as possible before I drop dead, at least.
Yeah.
Anyway, so
So why should anybody buy Red Eagle stock today?
because I think the catalyst is definitely going to be the permitting stage, perhaps a little bit on the DFS, but I doubt it. I would think the principal catalyst will be permitting, and we're grossly undervalued in terms of where we are today at $20 million market cap.
So what sort of investors should be, and how should they be playing the story? You know, somebody who's new to the gold sector, what sort of time horizon should they have, and you know, what's their profile?
You definitely want to hold it through the permitting,
Yeah.
right? So permitting or production.
Seems like in the early days of production is when these shares start to rip, like,
Mhm.
you know, when the
I
life
would say in the
cycle.
first year of production, where we are going to get a significant number of ounces coming out of the ground, we know they're there, and so that should give quite a significant uplift. To
Yeah, what's the market
to the
going to
value.
value a $60 million cash flow machine, and what, you know, obviously the market coming back to the gold sector would only support that further.
Mhm.
So
And look at the tier two, or even some of the tier one gold producers over history. A lot of them have started with projects like this, right? The most recent example is B2 in
Oh, yeah, I
Illinois
was
and
gonna say,
Nicaragua, right?
B2 Gold is one that started off pretty much exactly the same as we are.
with the one project,
Mhm.
Yeah, that's right.
Yeah.
Mm.
and then raise a shit ton of money and keep going. And
That's right.
Yeah.
So the sooner we get this in production, the better.
So what do you like about Ian as the CEO of the company?
He's the go-getter. He keeps me on my toes. You know, I'm getting a bit old, yes, I have to admit that. But Ian's got all of the energy and the enthusiasm that I need to keep going. I can sort of turn on him because I can play the grumpy old man act too. So,
But Ian, you're focused more, I guess, on money, and you're focused on
I'm focused on the
Project,
technical
yeah.
side of things
Yeah.
and getting the project, or basically, you know, in-country business.
So
to
far,
some
I
extent.
raised it and Bob spent it. So
Oh, that's about it.
we're hoping to turn that around.
Yeah.
So where Bob's making it and we're spending it on buying new assets.
Exactly.
What haven't I asked that maybe I should? What are we missing here? I mean, it seems pretty straightforward.
Well, I think. Well, you first.
No, well, I think one of the most important issues, and it's related to permitting, is a social license. You know, one of the environmental authorities from Antioquia, as you mentioned earlier on, made a statement to us, I guess maybe about 6 months ago now, and they said, you know, we're not too concerned about the technical aspects of your environmental licensing procedures, because we know you've done an excellent job on that. The most important one is that you've got to have social license. And I think that's one area where we've ticked every box and done an excellent job in that. You know, the team that we've got down there that's working with the communities and the stakeholders in the region have done an absolutely fabulous job. To date, I think we've done upwards of 80 stakeholder meetings with communities. We have community councils and things that work closely with us.
It's not like your project's sitting on a city, though.
It's sitting on a city, but it's a mining town. It's a population of about 45,000 people.
It's 20 minutes away.
And it's 20 minutes away, that's right. And when we started off our social licensing program in November 2012, where we had our first stakeholder meeting, and it was over 100 attended that. It went very smooth, as all of our meetings have to date. So, that gives me a huge amount of confidence in obtaining the permit because of the fact that we have done our social licensing work, and it's a continuing thing, of course, so well.
80 stakeholder meetings in the last couple of years is amazing. It's a lot of work, and I think we could have done a better job of communicating that to the investment market, the work that we're doing there, because they've done a great job.
What gives you the confidence in that timeline for permitting? I mean, sure, sounds good, the dialogue's good, the stakeholder meetings are happening. What gives a date? How does a date come out of that?
Oh, it's a date that we're aiming for, and we'd really like to hope that we can push it through within that time frame. But it is an unknown. There's no question about that. And but we have been given the assurances from the environmental authorities that they'll do everything they possibly can to get it done as quickly as they can for us.
So do they have to review your DFS? Is that?
No.
No, they only review the environmental study as it's been submitted, 1,000 pages long.
It's been submitted, right?
That's correct, yes.
And instead of the DFS, what they review is it's a separate submission. It's a mine plan, PTO it's called in Colombia, and we've submitted that back in November.
So it's in their hands?
Everything's in their hands, yes.
Yeah. So what kind of contribution does the project make to the local economy, royalties to the government? What's in it for them? To want them to speed up?
A huge number. I mean, it's 3.2% is the government royalty, plus 33% profits tax.
So.
And the other thing too is that we have assured the communities that we will work with them to develop sustainable projects with them. And another thing too is that we're working very, very closely with the Canadian Embassy in Colombia, who have good budgets to put into sustainable projects for communities, and they've been very, very cooperative with us. And we're at the moment still in the throes of just developing concepts and ideas, but they've given us their full support in terms of developing sustainable projects. So I'm very, very pleased with their attitude. It's been really good.
Ian, any last word?
Yeah, you asked what's important. I think is in addition to the social licenses, I think we get, and you touched on it earlier, is we get misunderstood with just being a 50,000 ounce producer, where like we said earlier, 50,000 ounce producer, we should build it if it makes money, and it makes a lot of money. But I think it gets lost sometimes in understanding of the project is that we have 350 square kilometers of the biggest mining district in Colombia, which was the biggest gold producer in the world. And it is littered with artisanal mines. It just goes as far as you can see artisanal mines where they mine the oxides, but the oxides are only 20 meters. And the chance of none of these other shear zones or historical deposits having any sulfides or economic sulfides, it's remote. So it's we've got a huge amount of work for us, a huge amount of drilling we need to do on these other deposits, and we've and that team, our geology team, is being led. We focus most of the conversation on our engineering team, but we also have a great geology team led by Jeff Toohey, who's he joined us a couple years ago from Peregrine Metals, which after Stillwater bought them, and he's been a great addition, and he spent his life working in Latin America. So there's I think a lot of exploration upside on Santa Rosa itself that there's no value for currently, but there will be next year when we're drilling it.
Mm-hmm.
Yeah, and the very fact that I made 100% sure that we had capacity to expand the plant to at least double its capacity that's how much faith I've got in the fact that we should find additional satellite sources of ore to double our throughput.
I want to thank both of you guys for coming. It's an important time, obviously, in Red Eagle's life. Summer, always quiet time in the resource markets, and it seems like you guys have an enormous amount of stuff going on. So I wish you all the best, and with the DFS, with the project finance, with the permitting, and would love nothing more than to see this come to fruition. And I think with a little bit of patience, things might just work out. So thank you for sharing the story with us.
Our pleasure.
Thanks, Tom. Thanks for having us.